What's going on, traders? Camilo here. So in today's video, we're going to do a quick update on the SPY Qs. We'll touch base on the SMH, IWM, Dow, and the VIX. Now, you guys see here on the scoreboard on the right-hand side, the winners for the day were the SMH and IWM. So with that being said, now let's take a quick look at the Qs, right? And we're going to show two counts, as I have always been showing you two counts since early December, right? So the two counts that I show you guys as a person, as a trader who does his wave and technical analysis using Elliott wave, you are always supposed to have alternate counts. One that is your preferred and the other one that is your alternate. And why do we have that? So that we just don't get overly biased to one direction. And that helps us, right? We have to see the two sides of the coin, whether it's bullish, whether it's bearish. All right. And that's what I've been presenting to you guys. I know last video, my title was the Qs to all-time high, and it was around here in which I released that video expecting that this was going to be the wave 2 of the retracement of this wave 1 and then continuation. However, I also mentioned, if you guys remember my video early in the year, I think it was Monday, where I said stuff that we got to look out for coming into this week, and one of them being the Fed meeting minutes, and that was released yesterday. And then obviously it's not something that the market was expecting. It was overly hawkish, and tech, Qs, Nasdaq, whatever it is, I mean, it's obvious, right? It's obvious what they're doing, and it was expected that based on the results of those minutes, there was going to be a reaction like this. Now, am I overly bullish here? Am I going to say we are going to hit all-time highs now again and whatever? Here's what I'm thinking, right? Here's my scenario. I'm turning this into my preferred count now. And this count, regardless of what anybody says, is still looking positive. Now, I'm going to explain to you why I don't think either this high here or this high here was the top in the market. All right, and let me explain why. Before I do, subscribe to the channel, give me a thumbs up, and hit that bell icon so you'll be notified when I upload these videos. So out of the lows here on October the 5th, we get 5 clear waves, right? We get 1, 2, 3, 4, and 5. 5 waves here to make up the wave 1. We then got a correction. Now this here, this price structure is super corrective. I mean, it doesn't get any clearer than that, right? We've just been sideways since literally, let's just call it here November the 23rd, all right? Sideways consolidation. Nowhere. Yes, we got faked out here, but it was something that we were expecting also. We were anticipating rather, right? Because we were hovering right underneath the 786. Now, 3-wave pullback into the wave A, 3-wave pullback into the wave B. Now we got 1, 2, 1, 2, 3, 4, and the final 5th. Now I am anticipating that coming into tomorrow and early next week, we are going to see further price action to the downside. Now, this is going to serve as an opportunity, potentially, right? We're going to be watching these 3 levels. We're going to be watching 378, 371, 375. Ideally 375, because that comes into some sort of confluence with a previous pivot point here, right? Out of the September 20th, we went to September 23rd high, and then we reversed down to make a new low. So this is a pretty important zone to hold that support, right? And also serves as support here, so support here, resistance here, and so on. So I will say that maybe there will be another downside leg coming into tomorrow. Okay, now back. Let me touch base as to why I don't see this point here or this point here being the top. Let's bring down our 5th wave here. Now, don't mind these labels here. It's not like I'm saying that SPY or the Qs are gonna go to 470. I'm just placing them there as the placeholders rather, right? Now, is this the top? And then are we now falling or rolling over, correcting the entire move from March 20th of 2020? And the answer is don't think so. And here's why. Out of the October 4th low, yes, we got 5 waves up. But if this was the final 5th wave, it will call for a very short 5 wave up. All right. And then say, I mean, it's not out of the question, right? And then say that this was the next leg down. How do you explain this to be the rollover? Wouldn't we already have seen something more aggressive to the downside? That's the first thing. Second thing is, okay, what if this here was our top? Answer me that. How do you explain that to be? And very simple. Sure, we see 5 waves up here. What if this is 1, 2, 3, 4, and 5? That's a truncated fifth. Don't they exist in Elliott wave world? They do exist. However, a truncated fifth is still an impulsive structure. And what do you know about impulsive structures? They are made up of 5 waves. Do you see 5 waves here? Answer me that. Do you see 5 waves here? No, you do not see 5 waves there. There are no 5 waves there. Only 3 waves. 1, 2, and 3. 1, 2, 3. Where is the final fifth? Truncated fifth, hence the name. All right. Even if it was very, let's push it, right? 1, 2. What do you see wrong with this already? Wave 2 went beyond the territory of wave 1. That's invalid. Okay, guys. So this is not the top. This is not the top. All right. We still see further upside. When? It's yet to be known. Do we see further downside? I mean, the only way I am gonna start getting very, 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 very nervous is if the Qs start breaking below this level. At that point, boom, that's it. Either that level or coming down to here. I mean, at this point, it'll be obvious, right? A big ass massive rollover. But first warning sign will be here. Now, let's turn over to our bullish count on the Qs, right? And here it's unlikely at this point. I did mention to you guys last week that I wanted to see the market come down towards this zone, the 618, which was confluence with the trendline resistance, originated here on November the 19th, confirmed on the 8th, rejected on the 15th, broke above it, and then roll over, but it did not hold as support. Now, I just don't think this is it. I think we see further downside. Okay, and confirmation for this count comes in here. Now, if you're bearish, if you want a short-term put option here, then you will put your stop above this 386, right? And then put your confirmation will be down below this, right? Below the low of December the 20th. Even here, right? December the 3rd. Now, levels to watch here. Okay, this is 1, 2. It's clear, right? 1, 2, 3, 4, final fifth. Now, 1, 2. So if we take this retracement from the 2 to the 3, right, and we turn on our, let's say for argument's sake, the 38.2 to the 50. Okay, you see that we are trying to roll over from the 38.2 already. Maybe this is A, B. We get another push up, just like this. I'll show you guys here. Right? A, B, C. All right. And then we come towards the 50% retracement. Okay, it is likely. Let's take a quick look what that could look like. And this will be a trap for a lot of bulls, right? A lot of bulls will think that, oh, this is it, we're out. And boom, what do you know? It'll come and hit you in the head. So confluence here comes in at 78.6 and the 50%. So it is likely that we see another leg on higher coming into tomorrow. All right, and then we get that rollover. So put your stop, if you're going to do that, right? Put your stop above the 78.6, the 100% extension. But again, I'm not thinking, and I'm not saying that this is all a wave 2. This is just an alternate until we break below 377.26. All right, guys. I hope that's clear. I hope I explained to you guys why I'm not thinking that this is the biggest massive rollover, and now we're correcting down into the whole move from 2 years ago. Now, I will tell you this, though. I will tell you this, that perhaps, let me go to a daily time frame and let me hide these levels, right? I will say that when the Fed is scheduled to finalize or the tapering, which is around June, July, that is when we will potentially see the rollover. We may see continuation higher on the final fifth wave, right? 1, 2, 3, final 4, and then fifth. Okay. Again, 1, 2, 3, 4, and then final fifth. And then that's when around this time, summertime, is when we get the larger corrective pullback. All right. That will probably retrace 23 to 38.2% retracement of the March COVID lows. So for you bears, just wait for that moment. For now, I do anticipate higher price action. And you can clearly see here, guys, there is a good argument to be made that we are holding this zone as clear support. All right, enough with that, and let's hop over onto the SPY. Let's see here, the SPY. 1 hour time frame. All right, so the SPY here, we also have 2 counts. Now, I'm not favoring much about this one. All right, again, the tech and the tech sector is the one that's getting hit the hardest because of the meeting minutes and what that represents. And so with that being said, I don't anticipate the wave that the SPY is going to do its massive flat, right? And that we're going to see price action come down towards 448, but rather we're going to see potentially that the SPY is going to be doing something like this. All right, again, we are going to continue to monitor this, but if this is the A wave, the B wave, that the 1272 retracement resistance, this is 1 2 3 4 holding the 38.2, and then we're going to get our final fifth of C of wave 2. Now this could be either to the 50, the 618, all right, anywhere of these levels. Now obviously we'll have to keep this zone on watch. We have to keep 451.16 on watch. So I want to see price action go further down coming into tomorrow. All right, maybe this A, B, and C, like in the Qs, and then we get our next leg lower. All right, I'm telling you this right now, guys. I'm excited for the zone. I am very excited to see this. It does give you a good risk, a good level of risk, because it's clear, right? If we get that lower leg, then our stop is right here for long-term upside opportunity. It's incredible. Anyway, over to the SMH, guys. SMH also proving itself to be still within the corrective structure. Okay, so out of the wave 1, we get A, B, down in C of wave 2. C is still likely that we are going to see for the price action 1 2 3 4 and 5. You notice that it did ever so slightly, but there's an argument to be made that if we take the closing price, we didn't break, right? We didn't break above the wave 1 low, so it's valid still in this lower time frame at the very least. Okay, so IWM is looking good at the moment, right? As long as we make, I'm just gonna hide this. I have to update the count. So 1, all right, wave 1, A, B, C. Now we got 1 2 3 4 and final fifth. Actually, let's update this here. We're still looking for this lower, potentially lower price action here in IWM. All right, guys. So this is 1 2 3 4 and then final fifth wave. Now our stop comes in at around 210.63. And then last but not least, let's take a look at the VIX. The VIX closing was a bit okay, I say, right? I mean, we are looking for the VIX to stay right below 20. We want to see this thing roll over. All right, if we take a look at the daily time frame, we see that that is a bit of the resistance zone that we've been after, right? We see that this area here, and you know, it got the wick and the close right below that 2054 level that we have been keeping on watch. So one can argue that it's flagging here and then we're gonna go up, but that's yet to be seen. For now, we'll leave it like that. All right, guys, so that's it for me tonight. I'm sorry if I sound a little bit low. It's just I have a bit of a sore throat here, and just gotta recover a little bit. All right, guys, so thank you so much. I'll see you guys tomorrow. Bye.